session. I would like to welcome everyone at our webinar hosted by AASB and IASB together. The purpose of today's session is to introduce recently issued exposure draft on management commentary. And I would like to welcome IASB board member Antarka, who will take us through the presentation, and my colleague Eric Lee, who will be helping with the slides. The session is being recorded, and the access to the recording will be published on AASB website a bit later. I would like to say that the views shared today are not necessarily the views of AASB members, but staff views or IASB board member views. Eric, would you like to add something?
Thanks, Helena. So to facilitate this webinar, participants are welcome to ask questions by using the Q&A function at any time during the session. They will also have a number of polling questions for you to respond in the session, which we encourage everyone to participate as your feedback is important. With that, I'm now going to put the slides on the screen and hand the session over to IASB member and staff. And I'm going to hand this session to you. Thanks.
Thanks, Eric. Thanks for your welcome. And Helena, thank you. Thanks very much to the AASB. We really appreciate your support in welcoming us to present today and to hear from stakeholders and constituents about our management commentary exposure draft. So we do welcome people in Australia, particularly those in lockdown. We are with you in spirit, but also more widely in the region. We're very pleased to be able to be joined by people in many countries through our virtual presentation today. So I'm Antarka, an IASB board member. I'm joined today by Yulia Fagina, Matt Chapman, and Jaco Jordan. So firstly, we'd like to kick off with a couple of polling questions. Eric, if we could have the first question, please. So this question gives us an idea who is on the call. So could you please indicate the choice that best describes your background? Eric, how are we going with responses?
Eric is on mute.
Sorry, I was just about saying, we asked to get any responses, and perhaps I'll give another 5 to 10 seconds more.
Good, lovely, thank you.
Okay, I'm going to close the poll in 2 seconds. I'm going to close the poll now.
Thanks, Eric. Can you show us the result?
Sure.
Excellent. We have a spread of participants today in our session. So thanks very much for all of you for joining us, and we look forward to your questions and your comments. And as Eric said, please use the Q&A function to extend your questions to us. Eric, could we have the second polling question, please? We're keen to know how familiar you are with the IASB's management commentary project. So could you please make a choice of one of these 3 answers?
Okay.
How are we going, Eric?
Yeah, it's moving. Just 2 more seconds, I can close the poll. Okay, I'm going to close the poll now.
Thank you.
And I'm going to share the results now.
Okay, that's excellent. So for those of you who are not that are aware of our project but not followed it closely, we hope you find today very informative. Those of you who are following closely, and great that some of you have already decided to submit a comment letter. We look forward to that, and we do encourage other people to become more knowledgeable about the project and provide feedback to us. So we're very pleased to have all of you on this session today, and we look forward to questions and discussion. So thank you, Eric, for running those polls. And if I could have the next slide, please. So today we'll give you a brief overview of the proposals within the exposure draft, and you can find the exposure draft itself and all the accompanying documents and explanatory materials on our website. So at the end of the slide deck, you'll see the various links, and so you can go to the Ifrs webpage and get a lot more detail. So we'll start off our session today with an introduction explaining why the board undertook this project and what the board is aiming to achieve. Then we'll outline the proposed objective-based approach, as well as the requirements and guidance proposed on selecting and presenting information. And we hope you'll find this very instructive and very illustrative of how we put the guidance together. We also have material in the slide deck on the proposed disclosure objectives in more detail. We're not going to cover that detail in the presentation, but please feel free to ask questions on any of these topics in the Q&A, and we've set aside time at the end of each section to take the Q&A. So with that, I'm going to hand over to Julia to continue with the presentation. Over to you, Julia.
Thank you very much, Anne. Eric, if we can go to the next slide, please. Thank you. So let's start with the basics. What is a management commentary? Management commentary is a financial report that accompanies company's financial statements and typically forms part of an annual report. Management commentary is known around the world under different names. So for example, in the United States, it's MD&A, in the UK, it is strategic report, and in Australia, it's operating and financial review. And the role of management commentary is to explain financial performance and financial position reported in the company's financial statements and to provide insights into the company's ability to create value and generate cash flows in the future. So at a very basic level, financial statements answer the question, what has happened during the reporting period? And management commentary and similar report answers the question, why it has happened and what it means for the future. Management commentary is aimed at information needs of the company's investors and creditors. It can be useful for other types of users of the information about the company, but it is not aimed at such broader range of users. If you think about how management commentary compares to other forms of corporate reporting, the main idea here is that management commentary is not there to serve, for example, public policy objectives. However, if particular matters, for example, sustainability matters, are important for the company's ability to create value and generate cash flows in the future, such information would need to be provided in a management commentary. In IFRS world, management commentary, preparation of the management commentary is guided by IFRS practice statement 1, management commentary. So why is the board revising the practice statement and what is the board looking to achieve in this project? If we move to the next slide, please, Eric. Oh, yes. So before if we go one step back, so we have a polling question for you actually here. And if we can have polling question 3, Eric, please. And the question is, in your view, what should a management commentary or a similar report achieve? Please tick all the answers that apply in your view. Eric, I leave to you to keep an eye on votes, and yes, even it's a good time to Thank you.
Yeah, we're still receiving responses at the
Yep.
moment. Still moving. Perhaps audience needs some time to think about this a bit more.
I can see some messages that say you could only select one response here. Okay. If that is the case, then perhaps select the best possible answer in your view. There was also a question what to do if there is a different answer which is not provided. Then you can perhaps put your answer in a chat window so we can see it.
Okay, I'm going to close the poll now.
Thank you, Eric.
And I'll show the results.
Okay, and I can see that most votes came to option 2, explain factors that affected current period financial performance and position and could affect them in the future. And indeed, if the question did allow to select more than one answer, then, you know, explain the related financial statements, explain sustainability matters affecting the company, all those items would also apply. The last one is an interesting one, provide a required list of information about the company. And we will touch upon this later in this presentation. So in the ISB work, we are not proposing a required list of information of management commentary. And this is because the factors that have affected the company or could affect the company could be so different that it's impossible to set out a required list of information that would apply to all companies in all cases and would still tell the company's story. And we completely agree with you that the second answer on the screen perhaps best describes the role of management commentary. So going back to our slides, why is ISB doing the project and why it is revising the existing practice statement now? So the existing practice statement was issued more than 10 years ago, and a lot has changed in that time. So first of all, there have been multiple developments and innovations in the sphere of narrative reporting. So for example, notions of enterprise value and value creation have developed after the existing practice statement has been issued. There is also increased focus and increased interest on the company's resources and relationships, in particular intangible resources. And we have all seen developments in sustainability reporting. We have also observed changing information needs of investors and creditors, and there is increased demand in information that helps them assess the company's long-term prospects. And in that context, information about intangible resources is particularly important, and also for some companies, information about environmental, social, and governance matters. We have also observed gaps in the current reporting practice in preparing management commentaries and similar reports. One of the very common shortcomings is that companies provide too much generic information, boilerplate information that doesn't really tell the company's story. Often this information doesn't really focus on matters that are particularly important for the company and are particularly important for its long-term prospects. And indeed, last week, we had a discussion with investors and creditors in Australia, and we had some polling questions for them as well. And it was interesting to see that of many potential gaps in current practice, they have indicated that many of those gaps are observed in Australia as well. And in particular, one of the most common responses was the lack of company-specific information and too much boilerplate information. Other types of shortcomings that we have observed in practice is short-term focus in the reports and lack of information that is helpful in assessing long-term prospects. Another common shortcoming is fragmentation of information, where the management commentary doesn't really tell a coherent story. And in particular, one part of this fragmentation challenge is lack of coherence between management commentary and related financial statements. And here again, interestingly, in our discussion with investors in Australia last week, they've indicated that in practice, it can be very difficult to reconcile information in management commentary with information provided in financial statements. So sometimes they tell two different stories. And finally, another shortcomings that we have observed in practice is lack of balance in management commentaries and perhaps undue focus on positive news without enough attention to more challenging news for the company. So all these factors have contributed to the ISB's decision to reconsider its practice statement now. And if we can move to the next slide, Eric. And fundamentally, what the ISB is looking to develop in this project is a comprehensive framework for preparing management commentaries that is focused and on investors' and creditors' information needs. And in developing this framework, what the board is looking to achieve is to create a framework that on one hand is flexible enough so it allows companies to tell their unique stories, but at the same time that is rigorous enough that it is possible to enable enforcement of that framework, and it's possible to enable assessment of compliance by assurers and regulators. And the ISB is also looking to develop a framework that can be compatible both with local laws and regulations and also with other narrative reporting requirements. And in developing this framework, sort of building on what we've discussed on the previous slide, the board is looking to consolidate innovations and best practices in narrative reporting, meet global capital market needs, and contribute to high quality and globally consistent narrative reporting. If we go to the next slide, please, Eric. And as a result of this project, what the board is looking to achieve is to enable preparation of a management commentary that can become a home for all material information about the company, including financial information, sustainability related information, and other types of information, for example, information about market share, which is material and necessary in achieving in assessing the company's long-term prospects. It would also be possible under the board's proposals to provide additional disclosures in management commentary that are required by local laws and regulations. And if this information is not material to management commentary, it would need to be provided in a way that it does not obscure information that is material for investors and creditors. And one particular route for management commentary in the future could be providing a reporting channel for information that might be required by the proposed new International Sustainability Standards Board. Next slide, please, Eric. And finally, I would like to say a few words of the status of the practice statement. Under the existing practice statement, a company's financial statements can comply with Ifrs standards, even if financial statements are not accompanied by a management commentary, or if they're accompanied by management commentary that is provided under a different framework. And that would continue to be the case in the future. So it would be for local lawmakers and regulators to potentially decide to either adopt or perhaps adapt the revised practice statement and incorporate some of the requirements in the new practice statement in the local laws and regulations, or equally, companies may choose to apply the revised practice statement, and companies might choose to do so, for example, if they're faced with broadly specified requirements where the practice statement would provide more detail on how such broadly specified requirements could be met. And finally, if the company complies with the revised practice statement, it would be required to provide a statement of compliance. So a statement of compliance would need to be provided if the company complies with all the requirements in the practice statement. If, however, a company complies with some but not all requirements in the practice statement, then a company would be allowed to provide a qualified statement of compliance that identifies departures from the practice statement and explains reasons for those departures. With that, I believe we have another polling question for you. I think it's polling question 4. So in your view, how would you like to see the revised practice statement being used?
Responses, just give me another 10 seconds.
And while the responses are coming in, I have actually noticed in the chat the answer to the previous question when we discussed the role of the management commentary. And the alternative answer that is provided here is focus on how organization created enterprise value during the year and is set up to create value in the future. And I think this answer may be expressed differently, but it is consistent with answer 2 that was provided in the previous poll, which was all about explaining the financial performance and position and explaining what it means for the future. And we will talk about how it sort of sits together with the notion of enterprise value later in this presentation. Okay, and if we look at the answers to the next poll, it's quite a diverse range of answers. So there is definitely some interest from the participants to see the practice statement used in Australia in different ways, either influence the development of regulatory requirements and guidance in the region, or even be adopted as guidance to help preparers meet the requirements, or even replace regulatory requirements in the region, which is just a couple of responses. And also many of you would like to see it setting a benchmark for best practices, like was the case with the original practice statement. Okay. So I think with that, we have come to the end of the introduction. Let's see if there are any questions before we move to the next part of our presentation. I don't see any questions in the chat so far. So perhaps we should move on to the next part of our presentation and talk about how the board is proposing to set up the new practice statement and see if there will be any questions on that topic. Jaka, over to you.
Thank you, Julia. And as Julia just mentioned, the board set out to create a framework that is both flexible enough to allow companies to tell their own unique story, but also robust enough to enable an assessment of compliance and regulatory enforcement if this is required. In order to do this, the board did not prescribe a specific list of disclosures that have to be provided by all companies in all circumstances. Rather, the board set out both an overall objective for management commentary as well as a comprehensive framework of disclosure objectives for 6 different areas of content. And these areas of content is the business model of the entity, its strategy, its resources and relationships, risks, the external environment, as well as the financial performance and financial position. And in each of these cases, the board is proposing that management focuses on the key matters affecting each of these areas. In order to help management identify information that should be provided about these key matters and other material information, the board is also proposing guidance and requirements on selecting and presenting information. And 3 aspects that we've heard a lot about that people want to see more of in the management commentary: long-term prospects, intangibles, and ESG. Requirements for these areas are pervasive throughout the different disclosure objectives, but there's also a specific appendix at the end of the exposure draft that explains to users and preparers how these areas are addressed in the different disclosure objectives. If we move on to the next slide, and this talks to the overall objective of management commentary. Here you can see the objectives has as 2 parts. One is forward-looking and one is backward-looking. The backward-looking part explains what has happened, and it enhances the understanding of the company's financial statements. There's also the forward-looking part that provides insights into the company's ability to create value and generate cash flows. This talks to what might affect the company in future, including in the long term. And as I mentioned before, the board is proposing that information is provided if it is material for investors and creditors to assess either the company's prospects for future cash flows or management stewardship of the company's resources. And on the next slide, we set out the framework for the disclosure objectives, which is really at the core of what the board is trying to achieve. As you can see, there are 3 different levels. And if we start at the bottom, the specific objectives, this tells the preparers what to disclose, what specific information investors and creditors would need for each area of content. Next, there is an assessment objective, and this tells preparers why certain information needs to be given, what assessment users of the financial statements will need to make. And this helps management to identify whether all material information in that area has been provided. And then lastly, we've got the headline objective. And this is the test of success, to understand whether sufficient information is provided for each area of content to meet users' information needs. As I explained before, there are 6 different content areas, and we won't go through all the disclosure objectives for all the content areas in detail, but in the next slide, we use business model as an example. And hopefully this will give you a flavor of what the board is trying to achieve with this objectives-based approach. If we start again at the bottom, the specific objectives relating to the business model area of content is to provide information to enable investors and creditors to understand the range, nature, and scale of the company's operations, the cycle of creating value and generating cash flows, the environmental and social impacts of the company's activities, as well as progress in managing the company's business model. And this last point is very important, and this is where we would expect people to use metrics where possible to give a quantitative idea of what is happening and how management is managing the business, and a little bit more on metrics later on. Then moving on to the assessment objectives. Again, this is why this information needs to be provided, and this is to provide a sufficient basis for investors and creditors to assess how effective the company's business model is, how scalable and adaptable it is, and how resilient and durable it is. Then the overall headline objective is to enable investors and creators to understand how a company's business model creates value and generates cash flow. Now, often existing local requirements will be set at this headline objective to provide information about a company's business model or how it creates value. And hopefully this slide illustrates how the additional requirements with relation to the assessment objectives and specific objectives could be helpful to preparers to know exactly what information needs to be disclosed in order to meet this headline objective. If you then move to the next slide, although the disclosure objectives are set for each of the different content areas, it is important to remember that these are interrelated. And this slide just sets out how these interact. So we've just looked at the business model content area, and that tells you what the company does. Strategy tells you where the company is heading. Resources and relationships gives information about what the business model and the strategy depend on. And risks tells investors and creators what factors could disrupt the business model, strategy, and resources and relationships. The external environment can affect any of these areas. And so to the extent that it is material, information about this external environment needs to be provided as well. And finally, the company's financial performance and financial position tells you how all of these factors translated into the financial results of the company for the period. And management commentary seeks to explain what drove that performance in more detail. If we then move on, we've got another polling question, and this is just to reflect on what you've just heard on the objectives-based approach and what you think of this approach.
We're still getting some responses in. Just give it another perhaps 5 seconds.
Okay.
Okay, I'm going to close the poll now.
Thank you for your responses there. So I guess it's comforting to know that the overwhelming majority seems to agree that the disclosure objectives provide clarity about investors' information needs. There are some saying that the objectives are not specific enough or a required list of information would have been easier. And as we explained before, the reason why the board is not proposing to give specific requirements for all companies is because companies operate in a wide variety of areas and industries, and companies' business model could be very, very different, and it is not practical to give specific guidance in all cases, especially if we want to meet the objective of giving company-specific information rather than generic boilerplate disclosures. But if you have any comments on that or any other questions, please use the Q&A facility now, and we can discuss some of your questions around the disclosure objectives themselves before we move on to more information about presenting and selecting information. Eric, do we have any questions?
I actually can't see any questions at all. Al or Helena, do you see any questions coming through? No. Okay.
Okay.
Thanks.
Okay. No problem. Yes, and with that, I'll hand over to Matt to provide some a greater sense of what the board is proposing in terms of selecting and presenting information to be included in the management commentary.
Yeah, thank you, Jaco, and good afternoon, everyone. So we've got a couple of slides now on materiality, and then we'll have another polling question. So if anything's clear, do feel free to drop some questions in the Q&A. So let me start by stressing that materiality in a management commentary is based on the same judgments as for the financial statements. Would the information influence decisions made by investors and creditors? So would it influence their assessments of the company's future cash flow prospects? Or would it influence their assessment of management stewardship? Now, we know that preparers find making materiality judgments in a management commentary difficult. These proposals are designed to provide much greater clarity over how to do this. So to help preparers, we've introduced the notion of key matters, as mentioned earlier. And that is the matters that are fundamental to a company's ability to create value and generate cash flows, including in the long term. So these are the matters that the company's future success rests on. They're likely to be the ones that management is already monitoring and managing. That focus on key matters is designed to give investors material company-specific information and also remove the pressure from preparers to report immaterial information or generate information that they don't actually use in managing the business. So information about key matters is also likely to span more than one area of content. Let me give you an example. If a company is exposed to an emerging competitive threat, say, then business model information would be needed to understand which activities are exposed and what their scale is. And strategy information will be needed to understand how the business is managing the exposure and what progress it has made in doing that. Now, also, just whilst we're on this slide, I also want to highlight two particular challenges in applying materiality where the board is proposing additional guidance. Firstly, we know it can be difficult to assess whether information about uncertain future events will be material. And that can lead to important information, for example, about business model resilience, being omitted. So we're proposing guidance to help preparers apply materiality in these situations, as well as identifying in the content area disclosure objectives, the types of information that might be required. But secondly, we know that investors find information is often presented at the wrong level of detail to be useful. For example, important information about diverging trends may not be visible if the performance information is over aggregated. So we're proposing guidance to help preparers determine the most appropriate level of aggregation. Now, on the next slide, we cover one further way in which we aim to help preparers identify material information. You heard earlier how the disclosure objectives and related guidance are designed to align with investor information needs and hence focus on material information. but the proposals also include examples of the information that might be material for each content area. Now, I'd love to take you through all the examples in our guidance, but one will have to suffice for this presentation. I would encourage you to look at chapter 15 of our proposals for examples that may be applicable to your circumstances or the circumstances of the companies that you invest in. It's a great way of getting a flavour for what a management commentary might look like. So let's take an example from the resources and relationships content area. One objective for this content area is to enable investors and creditors to understand progress in managing the company's key resources and relationships. The examples highlight that material information about this might include a description of the actions management has taken to develop the resource or relationship, and an explanation of the effects of those actions supported by metrics. Now, I want to stress here that the examples are there to help companies consider what is material in their circumstances, reflecting their business model and their strategy for dealing with the challenges and opportunities they face. They're not there as a checklist. So, for example, a digital content business might determine that its subscribers are a key relationship and that its subscriber additions metrics was important for understanding the progress management has made in developing this. Equally, a water utility will likely have identified its regulatory relationship as key. And that may well rest on, and therefore the company may need to report, for example, on how well it is meeting quality of service requirements that are set by the industry regulator. So that's an overview of the requirements and guidance in the exposure draft on materiality. We have another polling question now to seek your feedback on those. And again, if you do have any questions, feel free to pop them in the Q&A box. So question 6, what is your view on the proposals on materiality? We've got a range of options there for you. How are we doing for responses, Eric? And you're on mute.
We are getting responses. So they're about 60% of the audience have voted. I'm just going to give perhaps another 5 to 10 seconds. Okay, I'm going to close the poll in a few seconds. It's moving. Yep, I'm closing the poll and I'm going to share the results.
Okay, so what have we got? The vast majority of you feel that the proposals would help to improve preparers' focus on providing companies specific information that is important to investors. So we've got no, interestingly, we've got no votes for the proposals being limiting. So the suggestion that management commentary should focus on all stakeholder needs, that's an area where some of our audience sometimes feel that we should have set a broader objective for a management commentary, but I think the design decision with these proposals is very much about helping preparers to focus on the information that is material and therefore providing very clear guidance and very precise guidance on what would be material.
Matt,
Okay, thank you very much. Oh,
Matt,
sorry.
there was also a question or a comment in the chat window, and I wondered if this is something you would like to comment on. It sort of relates to the example for resources and relationships that you talked a minute ago. And basically, the question is how the board is bringing into its proposals sort of more quality, so to say, of how the board is going to facilitate more useful information about relationships and intangible resources that are not recognized as assets in the statement of financial position, and sort of relatedly a more broad question about how we are building on the integrated report in our proposals. If you want.
Okay, so some really good questions wrapped up in there. I think firstly I'll pick up on the resources and relationships question, which we will come on to in a bit more detail later on, but let's just briefly pick up on it now. So the first thing to say is when Jaco covered the content areas, you will have seen that the company's resources and relationships were covered there. Now, one important feature of the guidance on each of the content areas, actually, but particularly important when you're dealing with resources and relationship, is that we also provide guidance on identifying the key resources and relationships, because very often it's going to be the case that actually it's just one aspect of a particular resource or relationship where it's important that investors and creditors have information on them. So for resources and relationships, we say that a key resource or relationship is going to be one that the company's competitive advantage rests on, or a relationship that can't readily be substituted. That might be a related party relationship, but it could be something else. Perhaps the company depends on a single customer who its business model would face difficulties if that customer walked away. So it might also depend on concentration risk. So key resources and relationships can create concentrations of risk. So there is guidance there on what is key, and then also, of course, then the assessment objectives around resources and relationships are really important in helping preparers identify the material that's going to be important for investors and creditors. So for resources and relationships, the information provided should be sufficient for investors and creditors to assess the extent to which the business model and strategy depend on particular resources and relationships, and the company's ability to obtain the resource and maintain the relationships. So I think this question is a really good way of teasing out how the disclosure objectives work in an area which is really quite broad and has often led to quite vague statements in company reporting before on resources and relationships. Now, I think the second part of the question was about integrated reporting. And really there, I would come back to the observation you made, Julia, at the start of the presentation, that one of the things the board was doing was consolidating innovations since 2010, when the original practice statement was introduced. And it was able to learn throughout the project, both from what national standard setters and regulators had done in terms of developing ideas from the original practice statement, but also global developments such as integrated reporting. And for example, the technical expert for the IIRC, the Integrated Reporting Council, participated on our consultative group developing the proposals on management commentary. I think if I had to summarize how management commentary and integrated reporting compare, I would say that I think a company that was producing a good integrated report today would not find it difficult at all to transition to applying the requirements and guidance of the exposure draft if that is what they chose to do. I think in many ways these proposals take you to a similar point. We have been particularly conscious of the need to ensure that the proposals can be rigorously applied, but I think ultimately you would get to the same point. So that was quite a long answer. I hoped I picked up on all the elements of that question, because it was also quite a long question. Was there anything I missed, Julia?
I think it probably covers everything in that question, but we will look forward to any sort of follow-up questions on that. There is also another question in the Q&A function, and also touching upon a number of different points. But I wonder, maybe we need to finish the overview of the proposals first, because the question that was submitted is sort of, looking at the proposals as a whole, and perhaps we can answer it later in the presentation.
Okay, well let's come back to it, but we certainly won't forget it. So in the remainder of this presentation, we're going to look at the attributes of information in a management commentary, the metrics that might be required, and how proposals would provide insight into a company's long-term prospects. So partly back to that integrated reporting question. And then we'll finish just with a brief overview of the intended benefits of the proposals and a reminder on our consultation. So, as you might expect, the requirements and guidance on the attributes of information included in management commentary are based on our conceptual framework. However, we've used simplified terminology. Now, we've also designed guidance to address the practical challenges that we heard in applying these basic concepts to information in management commentary, because many of those issues that Julia highlighted at the start of the presentation around gaps in practice often came down to more general issues with the way in which preparers were applying basic ideas in the conceptual framework for financial reporting. So, for example, our requirements and guidance for ensuring that information in a management commentary is balanced cover both the balance of the management commentary as a whole. So, for example, because information about a matter required for balance has been omitted. And Eric, I'll just pause because I think we might have lost the slides there, but I'm going to carry on talking anyway. So the balance of the management commentary as a whole, for example, because information about a matter required for balance has been omitted, and also the balance of individual pieces of information within the management commentary. For example, because favourable or unfavourable information is obscured. And if you take time to look at the detail of the exposure draft, you'll see around about a page of guidance on what it means for information in a management commentary to be balanced. You may also be interested in the reference to verifiability. Ifrs standards don't address the question of whether information should be audited. So I need to be clear on that. That's not within our remit. That would be a choice that would be down to local regulators. However, and again, as mentioned earlier, we recognise that might be a choice that local regulators want to take. And so we have sought to design these proposals in a way that allows them to be enforceable and allows them to be assessed in the context either of regulatory compliance or an audit or assurance assessment. So what we do recognise, though, with verifiability is that some information included in a management commentary may not be verifiable. It might still be useful to users, but for users to make use of it, they would need to understand the underlying assumptions and methods of generating the information in order to use it. So the idea is not to prohibit judgments and estimates from being included in a management commentary because they wouldn't be verifiable, but to provide information around them that would allow the user of the management commentary to make their own judgment as to whether they wanted to rely on this judgment or estimate. Now, finally on this slide, I'd like to cover coherence. At a basic level, coherence requires that information in a management commentary is presented in a way that allows investors to relate it back to the entity's financial statements and other corporate reporting documents. For example, information in the governance and remuneration reports. But coherence also requires that information provided within a management commentary is coherent. So, for example, if a key external factor or trend is identified, coherence would require that the information about the company's business model should enable readers to understand the parts of the business model that are exposed to the factor or trend. So coherence plays an important role in ensuring that a management commentary doesn't leave unanswered questions, in ensuring that management commentary builds up a complete story of the matters that are key to the company's success. So now if we can turn to metrics on the next slide, please. So we've already covered briefly metrics that might be needed to understand how a company's key relationships are being managed. So let's take a broader look at metrics in a management commentary now. They're one of the most important aspects of a management commentary for investors and creditors, as you might imagine. So the first thing to say is you might have noticed that we don't have a metrics content area. And that's because material information about each of our content areas is often going to need to include metrics. Metrics may be needed to understand the potential implications of key matters, but they may also be needed to understand the progress made in managing those matters. The metrics each company needs to include in its management commentary will depend on its particular circumstances. And remember here that information in a management commentary is derived from the information used to manage the business. So these proposals would not require management to obtain or generate new metrics purely for reporting purposes. Now, we heard from investors that there can be particular challenges with the use of metrics in management commentaries. So our proposals include specific requirements over the clarity and accuracy, comparability and coherence of metrics, the attributes we discussed on the previous slide. For example, a metric that relates to one category of customers would need to be labelled and described in a way that clearly identifies its scope. And if I can give you an example there that often crops up when we're talking to investors and creditors, there's quite a lot of frustration with the way in which same-store sales information is presented. It seems perhaps that every business is able to report leading same-store sales growth and performance trends. So the idea there is not to restrict businesses from reporting metrics in a way that reflect the circumstances and the factors that drive the success of the business, but to make sure that the most appropriate basis for reporting is applied and then explained clearly in a way that can be related back to the foundation provided by the entity's financial statements. So let's take a look at another example of how metrics may be used in a management commentary, this time to provide information about the company's business model. So on this slide, we've listed 4 examples of metrics about a business model. Metrics might be needed to understand the scale of operations affected by a key matter. They might be needed on the company's raw material inputs. For example, to understand the company's exposure to long-term commodity price trends. They might be needed on a company's environmental impacts. For example, the volume of water abstracted at a key water stress site whose operation is under threat unless the company can reduce the level of water usage. An example of a company-specific, very company-specific example there. Or they might be needed to understand the company's exposure to environmental impacts. For example, the proportion of the business that might be curtailed by new environmental regulations or might be affected by new environmental taxes, for example. Now that takes me on then to the area of long-term prospects, intangibles, and ESG matters. I could comfortably do a whole presentation on one of these areas. As you might imagine, questions about how the proposals deal with information about a company's long-term prospects, intangibles, or sustainability factors come up quite a lot when we're talking to people about our proposals. And these were all important considerations as the board developed its proposals. For those wanting a more detailed view, I'd invite you to look at what is, I think, a 20+ page appendix to the exposure draft that illustrates how these areas might need to be addressed by applying the general requirements and guidance in the exposure draft. So let me start with long-term prospects. And first, I want to be clear that the proposals don't ask management to make forecasts of future performance, whether in the short or long term. So management needs to provide the information needed by investors and creditors to develop their forecast, but it doesn't need to do their job for them. However, a large chunk of many company valuations rests on their long-term prospects. So information that would affect an assessment of companies' long-term prospects is going to be important to investors and creditors and needs to be provided in a management commentary. The framework provides guidance to help preparers identify whether information about uncertain future events might be material, and importantly, when it would not be. You will also see that the disclosure objectives recognise the importance of this type of information. For example, information about a company's business model should be sufficient to support an assessment of its resilience and durability. Now let's turn to intangibles. And you'll have seen that we have a content area to address the company's resources and relationships. We talked about that earlier in response to one of the questions. And of course, many of these are going to be intangible. For example, the customer base, know-how, key distributor relationships, or reputation. The proposals ask for information about the company's key resources and relationships. So, for example, an engineering business might need to provide information on its retention of a business critical design team, but might not need to provide information about workforce retention as a whole. That's going to be a company-specific judgment as to what's fundamental to the business's future success. Where a key intangible resource or relationship has been identified, it's likely that information in other content areas will also be material. So, for example, the company might need to describe its strategy for addressing customer outflows or for responding to new competing technologies. So finally on this slide, I'll turn to sustainability matters. And you won't find a separate sustainability section in our proposals because these matters are pervasive and can affect a company in many different ways. But if an ESG matter is fundamental to a company's future prospects, it would need to be addressed across the content areas of a management commentary. And do take a look at the appendix to see what I mean there. To take one illustration, a description of a company's business model might need to identify the environmental effects of its activities. For example, because they might be curtailed by regulation or because they are adversely affecting the company's reputation. So let me anticipate the question that usually comes up, normally comes up in the first few minutes of our presentations. How does the management commentary relate to the Ifrs Foundation Trustees consultation on the possible formation of an international sustainability standards board? Now, whilst the two projects are independent, we might find that information specified by a future ISSB may be needed to meet the requirements for a management commentary. Remember, I said that information about sustainability matters would need to be included where it's material. Equally, a future ISSB might consider how information required by its standards would be suitable for disclosure in a management commentary. So an area that is developing, it's really difficult to provide a more precise answer to that question at the moment, whilst the proposals for a future ISSB are still being developed. So let me take you to the last substantive slide in this presentation, covering the intended benefits of the proposals. And really this is intended as a recap of some of the points that we've covered throughout the presentation. So what's the board hoping to achieve? Oh, yes, sorry, Julia.
I just wondered before we sort of, wrap up with the last couple of slides, whether it's a good time to take the questions that came earlier, because it touches on a few areas that we talked about. So I thought it's probably a good time to discuss that question before wrapping up.
Excellent, please do.
And this question really touches on a whole number of areas. So let me talk you through this question and maybe share some of my thoughts, and please add your thoughts as well. So basically the question is, what are the barriers that we can see in implementing the proposals? And in particular, would preparers companies be fearful about providing too much information, especially too much forward-looking information in case they get sued? And would it be a better approach to encourage companies provide information outside annual reports and perhaps leave information as numbers? And maybe I'll start with a couple of thoughts from myself and give Matt an opportunity to think a little bit about it as well, and then contribute. So first of all, talking about the barriers to implementing the proposals. And this is one area where we would really love everyone's feedback. We would like to understand what barriers you see in implementing the proposals, so we can take it into account in developing the final practice statement. But there are two particular barriers that we have considered that I would like to talk about. So of course, one barrier to adoption is around sort of the connectivity, if you will, between front half of the annual report and back half of the annual report. And this is one of the significant shortcomings in the current practice that we keep hearing about, including when we discussed the matter with investors from Australia last week. And the challenge here is that, at least in some cases, and perhaps in many cases, people who are involved in preparing financial statements are not necessarily the people who are involved in preparing the front half of the annual report. And often there is the disconnect between the story included in the front half and the financial statements. And in particular, one of the examples we've heard is that sometimes it almost feels like the company copy-pastes paragraphs from the front half of the annual report year after year. So the numbers are different, but the narrative is the same, and the narrative no longer tells the story. So one thing that the board has done in the exposure draft to help address this particular challenge is, first of all, to introduce the requirement for coherence between financial statements and management commentary, and Matt has spoken about the requirements for coherence. Another important tool that we're using in the exposure draft is using a very simple language instead of technical accounting language in the exposure draft to make it more accessible to a much wider audience than IFRS standards typically would be. So we hope that this way the revised practice statement would be understandable and accessible to people who are involved in preparing front half of the annual reports. So another barrier that we have identified in our work on the on developing the exposure draft, potential barrier is if the board's proposals would limit the information that could be included in the management commentary to the extent that some of the disclosures required by local requirements and regulations could not be included. And of course, one of the routes for the revised practice statements to be adopted is to be adopted alongside local requirements and regulations, where a company's management commentary or similar report could claim compliance both with local requirements and with the board's practice statement, and that way sort of contribute to globally consistent high quality reporting. And to remove that particular potential barrier, what the board has proposed is for companies to be able to include information required by local rules and regulations, even if that information is not material. So such information could be included. There is no conflict between the proposals for the practice statement and local regulations. Another sort of potential barrier, and this is hinted in the question itself, well, what if companies are asked to require too much, and what about commercially sensitive information? And that actually came up quite a bit when the board was developing the proposals. And in particular, we had a dedicated consultative group on the project that helped the board to develop those proposals. And we had users of financial statements, preparers, regulators, auditors represented on that consultative group. And there was quite a bit of a discussion, in particular from some of the North American preparers, that companies' lawyers would often ask the company to provide all possible information in the annual report, all possible risks, in order for the company not to be sued. And of course, on the other hand, users don't want a lot of sort of immaterial, boilerplate, generic information. Users want to understand what is really important for the company. And so to help address that particular concern, what the board has proposed is the requirement for management commentary to focus on key matters. And key matters are really those things and key risks that keep management awake at night, that are really important for the company's ability to create value and generate cash flows, including over the long term. And in our discussions with stakeholders, and particular preparers so far, what we have heard that in reality there will typically be about 5 or 10 such key matters that affect the company. So it's important for management commentary to focus on those matters. And sort of linking to a commercially sensitive information, so we think that the requirements in the in the exposure draft are set at a higher level than what would typically constitute commercially sensitive information. But it is important to tell the story. It is important to explain the numbers that are reflected in the financial statements and explain how company might develop in the future. So it's all about telling that unique company specific story. And in particular, picking up on the forward-looking information. So there is a lot packed in this question. As Matt already pointed out, there is no requirement in the practice statement for the company to provide forecasts. There is no requirement to provide forward-looking information. So there is a sort of a borderline, if you will, between what the company must do and the assessments that investors must do. So what the company must do is to provide information that enables such forward-looking assessments, but assessments themselves responsibility of investors and creditors. However, if the company did wish to include forecasts and targets in management commentary, this isn't prohibited, and indeed the exposure draft for the revised practice statement sets out requirements and guidance that would apply to forecasts and targets if the company provides them. So again, it's all sort of, geared towards useful information. And finally, towards the idea about providing this information outside annual reports and providing it perhaps in investor presentations and similar events. Interestingly enough, when we talked to Australian investors last week, one of the points that came up in the discussion was the idea of equal access to information. And indeed, some investors pointed out that sometimes companies are more willing to provide information in investor presentation, but not necessarily included in the annual report. And I think what came up in that meeting is that equal access to information is important. And if the company is providing this information in investor presentation, it's a strong indicator that this information is important to investors and it should be provided in annual reports. Matt, do you have anything to add? There are many different sort of points in this question.
There are, and that was a very full answer. So I'll just confine myself to a couple of additional remarks. So firstly, on the question of commercial sensitivity as a potential barrier, there may be situations in which commercial sensitivity arises, notwithstanding that generally the information in a management commentary is going to be more high level than would be useful to a competitor. Just as the decision on whether to adopt management commentary is a question for local regulators and standard setters, equally the decision on whether to and how to permit exemptions to that for commercial sensitivity is also probably best dealt with at a national level because of the different traditions in reporting around the world. So that was the first point. Then the second point is just building on your comment about information outside the annual report, and really the importance of the role of management commentary in bringing all the information and the narratives that companies have had with their investors throughout the year, bringing that all together into one complete version of the story, which is needed both for retail investors who may not be able to access the sort of detailed investor presentations in a way that a better resourced investor can do, but also because providing the information in a formal report gives investors and creditors perhaps some more reassurance of what they're being told throughout the year, just knowing that there'll be a formal report at the end of the year, which they would expect to see any consistencies or inconsistencies being highlighted. So I think I'll leave it there. I see we've got another question in on governance, which maybe we can pick up at the end, and then one on the nature, structure and form of the annual report as a barrier in practice. So and the observation here is CEOs want to talk about their company and its prospects. When you tie it to their financials, they clam up. That sounds like an observation from an investor there, doesn't it? So perhaps I'll answer that one and come back to the governance question later. So yes, there is a really strong emphasis here, which I hope you've seen through this presentation, on coherence with the financials as well as coherence within the financial statements. So for example, when you're talking about metrics, those metrics need either to be reconciled back to the financial statements if that's appropriate, or for example, if you're talking about customer numbers or something, related back to the financial statements. So I know one of the frustrations we heard was companies reporting customer metrics that then only actually really, it turned out, covered maybe 70% of the turnover. And of course, that's not representative of the full story. So coherence is a really strong theme, and building a story that it both explains what has driven the financials and also what is likely to drive the financials in the future is really a central focus of these proposals. Have you got anything to add on that briefly, Julia?
No, Mark, I think we covered everything.
Okay, so what I'll do is I'll just cover the intended benefits of the proposals, and then we'll pick up on that governance question, because that's one that does come up quite a lot. So what was the board hoping to achieve with its proposals? Well, firstly, for investors and creditors, we heard the frustration with unfocused narrative reporting. So the proposals are designed to produce management commentaries that focus on the matters that are really fundamental to each company's long-term prospects. We've also heard that whilst metrics should be comparable, it is most important that they are relevant. So instead of prescribing lists of metrics to report, the proposals are designed to provide a robust basis for identifying the metrics needed to assess a company's prospects and progress. And we'd love to hear feedback on how well you think we've done that. And the board has also designed management commentary to bring all the information types together to tell the company's story. For preparers, we heard how difficult it can be to identify the information needed to meet investor needs. And so the disclosure objectives and materiality guidance in these proposals are intended to enable you as preparers to provide this information in a focused and concise management commentary. The board also heard that rigid disclosure frameworks can sometimes prevent a company from telling its story clearly. So the proposals are designed to enable companies to provide a complete and coherent narrative that's built around the information they use in managing their business and addressing their challenges. For regulators, auditors, and indeed audit committees, we know it can be challenging to assess compliance with narrative reporting requirements. These proposals are designed to support these assessments whilst leaving companies the flexibility to tell their unique story. The proposals also offer a globally consistent foundation to meet the needs of the capital markets. As you heard earlier, the board sought to consolidate best practice from national and other reporting frameworks. So at this point, and with the last slide, I remind you that we're consulting on our proposals. If we can have the last slide. So if you think the proposals could do more to deliver any of those benefits, then please do respond to our consultation. We'd really like to hear from you by 23rd of November. So with that, let's take the last polling question and then come back to that governance question. So Eric, we have the 7th polling question, asking the audience for their overall initial impression of the proposals. And we do understand that there's been quite a lot to take in the last hour and a half. So initial impression only, but we'd love to hear more detailed comments either directly or through the consultation.
We're getting lots of different responses. So just going to give about another 10 to 15 seconds. More than half of the audience have voted. We're still getting responses in, so
okay,
it's going to wait for a bit. Okay, I'm going to close the poll now and share the results.
Okay, well that is very reassuring in terms of striking the right balance between enforceability and flexibility. As I hope you gathered, that was probably number one at the forefront of our discussions throughout management commentary. But we really do want feedback on whether we've got that right. So do respond to the proposals, and we quite understand for those who haven't formed a view yet. Right, if I can just, I realise we haven't got long left. If I can just pick up on the governance question, and then I'm sure people will want to make some closing comments. So the questions that's raised is, should we be doing more on governance? It's a fair question, and it's one that comes up a number of times. Now, the design decision behind these proposals was that management commentary should not be trying to replace an entity's governance report. However, as you might also have seen, particularly when we're discussing the ESG section, there are many areas where there's going to be an overlap of information between a management commentary and a governance report. So the emphasis in the exposure draft is on coherence with a governance report, and identifying the many areas where governance information might be relevant, but what the exposure draft doesn't try and do is set requirements for describing an entity's governance processes. So that's where we've sought to draw the line. Again, we would love to hear feedback from you on whether you think that's the right line to draw, or whether we should have gone further, or whether we should have gone less far, in fact. So we're coming up to the half hour, so let me hand back. I think, Yulia, you want to come in?
Thank you, Matt. And I don't see any further questions. So I just would like to thank everyone for joining us today, and for submitting your questions and also providing your responses in our polls. And just to highlight that we really would like to hear from you in our consultation. And this is not the last event that we're running over the course of the comment period. So please watch that space. And I should probably hand it over to Helena to wrap it up.
Yeah, thanks a lot, Yulia, Matt, and Tiago, for a great presentation. And of course, Anne, thank you. It was very informative, and I just wanted to highlight, as I mentioned previously, that the recording will be available on AASB website. I would like to thank everyone for the feedback and questions. And we will be doing further outreach. So if you have any further comments, then please let us know either via the submission letter or just email it to us. Thank you, everyone, and have a good evening.
And many thanks to the AASB for hosting this and giving us the opportunity to talk to you. It's really helpful to us. Thank you.
Thank you.
Thanks, everyone. Bye.
Bye-bye. Bye.